Very good evening, ladies and gentlemen. I am Saurodeep Sarkar, the moderator of this call. Thank you for standing by and welcome to Hindustan Unilever Limited's September quarter 2012 earnings call. For the duration of presentation, all the participants' line will be in listening only mode, and we will have a Q&A session after the presentation. I would like to now hand over the conference to Mr. Dinesh Thapar. He's the General Manager for Investor Relations. Over to you, Mr. Thapar.
Thank you, Saurodeep. Good evening and welcome to the September quarter 2012 results conference call for Hindustan Unilever Limited. We have this evening with us Mr. Nitin Paranjpe, CEO and Managing Director, and Mr. R. Sridhar, CFO, on the call from the HUL end. We'll start with the presentation talking about the September quarter results, which Sridhar will take us through, and then we will have Nitin share his perspectives on the business performance. This will be followed up by a question and answer session. Now, this is the feedback that we received from you the last time around. We have switched the technology. There are two options which will be new to you this time around. You will receive an audio feed through an audio line, which is your telephone, and you could also receive it through your laptop. If you therefore choose to use the audio line, I would recommend that you put your laptop speakers on mute because there will be a latency between the two. The other option that we have for you this evening is the option to be raising questions and posting comments, which you will see appearing on a screen below the presentation slides. Would therefore recommend that you use that option as well. Before I start the presentation and hand over to Sridhar, I would like to draw your attention to the safe harbor statement included in the presentation for good order's sake. Over to you, Sridhar.
Thank you, Dinesh, and good evening, everyone. Thank you for joining our September quarter results call. As always, I'll just start with a brief reminder of our strategy. We'll then give you a sense of how the FMCG environment took place in September quarter, and then walk you through some details about our financial results during September quarter. So, as a reminder, compass which guides our strategy is our strategic framework. That remains unchanged. As we've discussed in the past, it sets the direction for us by setting ambitious goals demanding a growth mindset. It requires us to focus on consumers and customers while imbibing the performance culture and driving speed through our actions. The Sustainable Living Plan is at the heart of our operating philosophy and gives us our purpose. And together we strive to deliver goals that meet a 4G criteria, which is growth that is consistent, competitive, profitable, and responsive. So, with that reminder, let me say a couple of words around the business context in September quarter. Clearly, the environment remains very challenging. Fast-moving consumer goods markets sustained double-digit growth levels in September quarter. Important to point out that in soaps and detergents, a larger proportion of the market growth continues to be driven by price. As we move through the quarter, there are some signs of moderation in volume growth in some of the discretionary categories. For example, in personal products, in packaged foods. On the cost front, we continue to see a volatile cost environment, and on the competitiveness front, we have seen a clear step up in competitive intensity, particularly media intensity, and I'll talk about that a little later. From a cost environment perspective, the chart that's coming up on the screen now, we've put out three parameters which are quite important from a portfolio perspective. One, which is crude, which as you can see held steady during the quarter. Forex, that was on an increasing trend, but as we ended the quarter and got into October, we have seen some clawback. So clearly, the Forex situation remains volatile. And in relation to palm oil and specifically PFAD, we saw some softening, clear softening in September quarter. So all in all, from a cost and commodity perspective, currency, commodities, which translate into total cost, we see volatility continue, and it's something I guess has become the new norm. In this environment, how have we performed? I think the summary is that we've delivered a robust set of business results, delivering growth that is profitable and broad-based. Our consumer business grew by 16% with a strong 7% underlying volume growth. As in previous quarters, growth continues to be led by modern trade and rural channels. However, during this quarter, the canteen stores department channel has adversely impacted our top-line growth. From a margin perspective, operating margins improved by 100 basis points, which is a combination of our continued focus on cost efficiencies, cost savings, as well as some judicious pricing, a combination of which resulted in our cost of goods sold coming down by 140 basis points. As I mentioned earlier, media intensity had gone up, and our A&P spend has also gone up by about 120 crores, which is about 70 basis points higher as a percentage of sales. Profit after tax and before exceptional items, which is sort of the underlying and comparable net profit figure, is up 23%, while our reported net profit, after taking into account exceptional items, is up 17%. So in summary, as I said, strong top-line growth, healthy margin expansion, and a good bottom-line growth. Before we get into each of the segments, just a snapshot of our segmental growth performance, and you can see double-digit growth in all segments. Overall, as I mentioned, domestic FMCG grew by 16%. Let me now give you a sense of one of the key drivers of growth, which is innovation. As we've said before, innovations and in-market execution are the key drivers of our growth. During this quarter, we continued to focus our innovation on strengthening the core as well as leading market developments across segments. Some of the key innovations which we launched in the quarter are reflected in this chart, and I will talk a little bit more about them as we go through the various business segments. Finally, before getting into the categories, a little bit of detail around the point I made earlier about media intensity. If you see this chart, both in terms of the dark line, which represents the soaps and detergent segment media spend, as well as the lighter line, which reflects the non-soaps and detergents segment media spend, the overall spend by the industry in terms of GRPs has clearly moved up in September quarter. Going by our data, this seems to be at the highest level in the last 15 quarters. Needless to add, we have ensured that our A&P spends remain competitive. Our spends have been increased by about 120 crores, as I mentioned, and brand investments have been stepped up across all our FMCG segments. At the same time, focus on driving return on market investment continues. Now, let me come and share with you some details about our individual categories. Starting first with skin cleansing. Skin cleansing, which has had a very good run of strong double-digit growth, continued its strong performance in this quarter. All our key brands grew in double digits, particularly Dove and Pears continued to drive premiumization of the skin cleansing category. In Lux, our growth momentum has been sustained, while Lifebuoy delivered one of its strongest quarters. Looking at the segment of tomorrow, which is the liquids part of our skin cleansing business, our liquids portfolio growth further accelerated during this quarter. Moving next to home care. Home care, which comprises laundry and household care, also delivered broad-based growth. In laundry, all our brands and formats grew in double digits, with particularly strong performance in the premium portfolio. Surf and Rin delivered double-digit volume growth, and in fabric conditioners, we continue our efforts to drive market development with the launch of Comfort One Rinse variant. In household care, both Vim and Domex registered strong double-digit growth. During the quarter, we launched an anti-germ bar variant within Vim. Coming now to our personal products categories, and let me start first with skincare. During this quarter, our skincare performance, skincare growth is slightly modest when you compare with the past trends. Within this, we had strong double-digit growth across Pond's, Vaseline and Dove. Pond's growth was led by Age Miracle at the premium end. Fair and Lovely, as you will recollect, we relaunched towards the end of the previous quarter. The launch has been well received with good consumer recall on the new proposition of skin treatment. Within this, we continue to see the momentum on Fair and Lovely tubes being sustained. In sachets, with the relaunch, we took a price increase from 7 to 8, and consistent with our previous experience of price increase in sachets, we see that this takes some time to stabilize. Next, to hair and oral. There's been a clear step up in the growth of our hair and oral categories. Hair, we saw broad-based double-digit growth. This quarter saw the relaunch of our flagship brand Clinic Plus, as well as a innovation of hair fall rescue range in Dove. The big news of the quarter is the introduction of TRESemmé, which is a new brand being added to our hair portfolio after many years. Conditioners, where our role is to really develop the market and build the market, continues to grow well, gaining consumer franchise. In oral care, both our toothpaste brands grew in double digits. Close-Up was relaunched during the quarter on the proposition of extra long-lasting freshness. And in Pepsodent, both Pepsodent G and Expert Protection have done well. Just to give you a little bit more color on the new brand that we've launched, TRESemmé. TRESemmé is a brand that you may recall has recently got added on to the Unilever portfolio through the acquisition of Alberta Culver last year. This brand is having a strong proposition of giving users the power of a salon experience every day at their home. This has just been launched in September quarter. Moving on to beverages, where growth was led by coffee and premium tea. Within tea, growth was led by modern trade. Our top-end brands in tea delivered double-digit growth, while Taza saw a revival in growth on the back of its relaunch during the quarter. Coffee sustained its strong double-digit growth performance, both across instant and roast and ground formats. Our premium coffee, which includes Brew Gold and Brew Exotica, continues to grow strongly, and the Exotica range was expanded with the introduction of a Guatemala variant. Alongside innovation, we are also driving activation and leveraging digital to drive our connect with consumers. This slide gives you an example of a big digital campaign on Red Label, which was around consumers calling the film stars and recording their own personal message about why Red Label was not only tasty but also healthy. Coming on to packaged foods, we've talked about our packaged foods portfolio having 3 platforms, Knorr, Kisan and Quality Walls. So Kisan delivered good double-digit growth in ketchup in the non-CSD channels. Knorr had good double-digit growth in soups, and